Good afternoon, guys. Good morning to you guys in Europe. Welcome to Markets Today with me, Gaurav Kashyap. We saw a bit of dollar strength coming into the US trading session yesterday. Of course, we saw US markets completely cover 100% of those sell-offs experienced from last week following the Trump controversy. And overall, we saw US Treasury yields also increase, and this lent a lot of support into the dollar. The dollar has now nicely bounced back from those 6-month lows tested this past Monday at 96.70 levels, and now we're seeing some consolidation in the US dollar index at 97.4. Following the Euro USD's spike to those 6-month highs, it was only normal that we'd see a little bit of profit taking on some of those long covering positions, and we can expect a little bit of more of that through trading today. Of course, looking ahead to the US session, we have the FOMC meeting minutes releasing at 7 p.m. UK time or 6 p.m. GMT, and traders will be looking to pick up hawkish cues from the recent FOMC meeting minutes, and this could spark further rallies in the US dollar through the US closing today and into the Asian session tomorrow morning. Earlier during the Asian session, we had news out that Moody's had downgraded China's sovereign ratings. This didn't seem to have too much effect on the markets. Of course, the Chinese yuan spiked on the downside slightly following the news. However, the Australian dollar and the New Zealand dollar, who rely very heavily on China and Chinese data due to their trade relations, were largely unchanged, and now the markets seem to have normalized. Overall, we've seen gold also snap through that support level of 1257 following dollar strength. We're looking at probably good support to come in at 1244 levels for the precious metal today. So if you are feeling in the mood, you can look at maybe shorting gold with that target of 1244 on the downside today. Overall, also we will be looking at the crude inventories due out at 2:30 GMT today. The data is expected to show inventory buildups of around, inventory drawdowns of 2.4 million barrels. This could see a little bit of volatility coming into crude, but overall markets will be largely subdued following the spikes in the West Texas Intermediary above $51 a barrel. Remember, we have the OPEC meeting due out tomorrow. Markets are largely expecting to see a comment from the OPEC along the lines of the production cuts will be extended through March 2018, and at this point we're not looking to see any major cuts in those output levels. So we will wait and watch how those developments come out from OPEC tomorrow. And finally, we'll keep an eye out for the UK GDP reading report due out tomorrow. Overall, the pound continues to range in this channel between 129 and 130. It looks like the bullish momentum in the GBP USD has stalled above 130 levels, and this could possibly see a correction. But once again, any short positions in GBP USD above 130 levels look safe for a target of 50 to 60 pips on the downside. Guys, if you like this video and you found it quite helpful, please give it a like. Please leave your comments below if you have any questions. I'd love to address them for you. Also, I'd like to share with you one new major development. We have something called the newsroom, which is available on our website at equity.com and also at egmfutures.com. It's there in the red text at the very top. You can also find the link in the comments below. It's very, very advanced. We've added a lot of new market reports and breaking news, and you might find it really, really useful.